Afternoon and welcome to Closing Bell. I'm Anuj, with me, Prashant and Nigel. It's not turning out to be a good week for the Bulls, and it's definitely not ending on a good note. It's just brutal. And brutal is the word which comes to my mind because for last 2 weeks, we've been talking about decoupling, how it's been thrown out the window in just 2 trading days. And now we're talking about recoupling once again, right? But what's happened today? Essentially, the banks have led to this big, massive decline for our market. And like I was explaining in Bazaar as well, there's some algo trades which played out today. The moment the rupee cracked, it started playing out from yesterday when it cracked 80, which is that financials started to lead that decline because of this currency turmoil. In fact, the dollar index is making yet another surge towards its fresh 20-year highs, and the rupee is already at 81 and beyond. For me, the big risk is, and perhaps today's numbers would corroborate that, if we have a negative number today, then that would mean that for September we'll turn negative from the FI point of view. And the bigger risk is, which is something which came along in that conversation with Goldman as well yesterday, that was the rally last month driven essentially by ETF flows. And this ETF money is very choosy. I mean, it just turns on a dime. If it doesn't get momentum, it just moves out. And so, are these ETFs selling again? They took the market higher. Are they taking the market lower? Because if you look at the kind of stocks which are falling, HDFC Twins, other banks, it clearly smacks of that FI selling. Pharma is the only pocket which has done well, but then it doesn't count for much in the index. So, brutal is the word, Prashant, Nigel. Afternoon.
Afternoon, Anuj. Nigel, hi. No, absolutely. But, Anuj, I'm just looking at, today it seems absolutely big and brutal, as you said. Year to date, guess what returns are? We have just turned positive, right? I mean, negative, sorry. We're down 0.2% on the Nifty. So you basically are correcting an earlier overreaction on the upside. I mean, the reaction was on the upside. It kind of was very aggressive in the face of what global markets have been doing, and you're getting a bit of a throwover today. And this is something we've discussed with guest after guest without, of course, I mean, you can get some insights, you can get a take, you can get an opinion, but there's no way to know when that will turn. But the question to guest after guest has been, can the outperformance like this continue? It has not in the past. Maybe, we're getting at least a one-day answer today. Who knows about Monday? But for now, it's firmly lower, 1,000+ points on the Sensex and a 315-odd point cut on the Nifty. Nigel.
Well, very often, gentlemen, after a while, we're seeing this sort of a screen. And by the looks of it, I think by the end of today, the FI number will not be too pleasant. Yesterday as well, we had a big sell number. And, it's in all likelihood, that could be a large number today as well. Take a look at Power Grid, one of the big outperformers of this year. It was trading with good gains. As we speak, the stock is down close to 10%. Maybe there is that fear that they'll be forced to go ahead and buy REC. That news came a couple of days or so ago. But as we speak, the stock is down close to 10%. Lower circuit, temporary freeze. That will get flexed in the next few minutes or so. So let's see whether or not there is some bottom fishing out there, or it moves back, towards the lower end in terms of circuits. Plenty to talk about. Final 60 minutes coming up of this week itself. First up, running you through all the top stories as well as what we have lined up for you. Bears take control of the Wall Street with key indices down 1.5%. The Nifty and the Sensex erased most of 2022 gains. Financials, the clear laggards in trade today. All sectors trade well in the red. Tata Steel says it will merge its listed subsidiaries to simplify the group structure, plug value leakages, as well as exploit synergies. CFO Kaushik's strategy tells CNBC-TV18 the move is EPS accretive. We'll get you more details later on. Mahindra and Mahindra financial slides after RBI asked it to stop using recovery agents following the tragic incident. The company says it does not expect this order to impact its collections. More details lined up in just a bit. And finally, Aman Chauhan of Abacus Asset Management, our alpha manager of the day, will join us with his top portfolio bets as well as his view on the markets.
Okay, but first up, as always, we take the last hour calls. The market, by the way, is just heading one way down. I mean, everyone, all the, market chat was that at some point, perhaps things will turn, but this has not been that kind of a market. Just one way, at least on an intraday basis. The broader market is at 1:5 in terms of advanced decline. And look at the bank Nifty, 3% down. I mean, 20-day exponential moving average has really been taken to cleaners over there. 1,200 points and counting. Mitesh is joining us first up on the show. Mitesh, good afternoon. This is as brutal as they come, right? 2% on Nifty, 3% on bank Nifty. Your thoughts and your stock calls.
Yeah, Anuj, right. I think, we were also looking at this fact that in case we start breaking below 17,500 area, then I think, we might give a deeper cut or a pullback to about levels of 17,150, 17,160, which is on the weekly chart, an important moving average area. So I think that movement is started. Today, I don't expect this fall to, extend much beyond this level of 17,150, maybe 50, 60 points on an intraday basis. But broadly, if this level holds, then I think market should be all okay. Otherwise, then we'll look for a bigger correction if the signals continue of weakness. So for the time being, trading with negative biases, stocks are clearly giving pullbacks to their daily and weekly averages, and therefore have a lot of sell signals on the hourly and 2 hourly charts. So I have identified a Bajaj Finserv, which possibly can be taken as a short position, short trade. Keep a stop at about levels of 1740 here and look for targets of around 1665 on the downside. And the other one is Tata Communication, which is also breaking down. That's a sell with a stop at about levels of 1182 and a target of around 1120 on the downside.
Yeah. Okay, by the way, just before Mitesh, thanks a lot for that. Just before we move forward, Nigel, since you referred to Power Grid, there's a very interesting Jefferies note this morning, I think, on that, where they're talking about, almost up to 5% EPS impact. The dividend yield getting hit to 4% versus 6%. And I think more importantly, the good governance history coming under the scanner, because, Power Grid has had good governance history, and maybe that could be under pressure. So that's why I think you're seeing this move on the stock.
But has anything happened?
So this has been proposed about for the last couple of months or so, that Power Grid will be told to pick up RECA. The problem is
stake in RECA.
PFC stake in RECA. So that's an issue because it's an unrelated business. It'll be a few thousand crores or so. That's why the street didn't like that. And in the last couple of months, the news has been getting louder that, it could happen. So now I think the street is coming. I mean, it's a bad day as it is. But that news piece has been getting louder, particularly in the last couple of days. So and that could be one of the reasons.
And the Jefferies note probably just tipped it over. Okay, all right. So that's a sharp knock on a quality utility. But that is, if that were to happen, probably would be no fault of its own. It's a government company at the end of the day. But those are the facts at this stage. Till something happens, we don't know, but the fear is that it may happen. Deepan Mehta is with us, Director of Elixir Equities. Deepan, good to have you with us here. Thank you very much. So we got a big 300. We get these occasionally, don't we? I remember 3-4 days back, we had that very large cart, and then the market came right back. Your sense, Deepan, will it be one of those once again? And will the market come back, or you think this time maybe stays lower for longer?
Good afternoon, Prashant, and thanks for having me on your show. I think till the tremors in the global markets don't settle down, we will face these negative flows and negative price moves over here. But I think it will settle down. And these corrections, I think if you have money in the sideline, these are good corrections to get into the market. I think overall the fundamentals, medium to long term of Indian economy, as well as corporate earnings, that picture hasn't changed much. And in fact, some of the export-oriented businesses may benefit from rupee depreciation as well. So I'm not too perturbed about this correction which we have seen today. It always appears to be dramatic because of the way the FIIs, the way they sell stock in the market over here. They are truly the price makers. But on the whole, I think it's always a good time to buy in bear markets, especially when you know that the underlying fundamentals are pretty much intact.
Deepan, hi, good afternoon. Would you buy Power Grid 10% lower?
I think there's more to it, when a stock like Power Grid, and it's a utility company with kind of assured returns and very good capex plan also in place, and when it falls 10%, then maybe you can expect that some adverse news flow is just around the corner. So whenever a stock is correcting like this, it's best to stay away. There's a great degree of uncertainty around it. And in any case, I think we are not that great fans of PSU companies per se. So I would avoid buying Power Grid at these levels.
Okay. All right. Fair enough. Power Grid is one of those names, you're absolutely right. It's one of those names which get picked out as things to buy in an uncertain market environment, right? So that itself is taking a very, very large knock at this point in time. So you said you'd want to buy stuff, Deepan. Share a few names with us? Ideas?
Yeah, again, with mutual disclosure. So, we are working on this theme about the festive season, which is coming up. And I think your channel also has covered it pretty well. And we're looking at one of the best festive seasons ever for Indian companies. And if you keep that investment theme in mind, a lot of retail plays do come into focus over here, especially some of the new listings. I think they've come with good numbers. And after a spectacular listing, we have seen decent correction also taking place. So the usual retail names which come to mind over here, the new listings like Metro Brands, Go Fashion, some of the other Ethos watches. I think all of these should be studied more closely, and at correction, I think these are good stocks to look at on a medium to long term basis. They are trading at valuations which are more or less in line or slightly cheaper than the earlier older listed retail companies or peer group companies, but their growth rates are significantly higher. They do not have that much of a history as far as listing is concerned. But then I think these are solid managements and they've built up businesses from the scratch. So I think all of these are pretty interesting. And apart from that, I think the usual suspects when you want to try and buy consumer stocks in a festive season are companies like automotive, as well as to an extent, travel, tourism. Those sort of stocks also should do pretty well over there. A new listing which comes to mind is Dream Folks. I think that's also corrected from its highs. So we are working a lot more with some of the new listings, some of which are concept stocks, some of which offer very specific investment objectives. So you could look at those companies. I think they should do pretty well if you buy in these corrections.
All right. Dipan, one of those stocks that are doing well today is Divi's Laboratory. The stock, year to date is down 22%. It used to trade 35, 40 times odd. Now, post the recent correction on a forward earnings basis, is trading a little below 30 times. And in a market that's getting clobbered, the stock is up 2.5%. What's your view on the stock? It's been a wealth creator over the last many years, but because of the margin compression and other headwinds, the street got a little bit skittish. At around 3,600 odd, do you think it's worth a buy?
Yeah, Nigel, I think that it's a safe stock at this point of time. Pretty good earnings visibility, but growth is a bit of a suspect. And I think next maybe couple of years after having seen such spectacular growth during the COVID times and before, the base effect is coming into play. And maybe the kind of order visibility is not as great as it was earlier. And some of the COVID opportunities do not exist for the company as well. So valuation wise, reasonable, good steady earnings, dividend yield, but not that much growth is there. So I would say if you're invested in Divi's Laboratories, I would remain invested as we are. But from a fresh investment perspective, I think it's better to go for some of the high growth themes which I just spoke about just now, or even some of the other companies maybe which are not at least in the pharmaceutical business, because that's one industry we'd like to avoid.
Deepan, anecdotally, when you buy into these accidents in M&M Finance, you end up making money. But this time as well, you think that's how it might pan out?
Yeah, no, you could have a trading bounce. I mean, it's not going to make much of a difference to the earnings of M&M and the management. M&M Finance and the management has clarified. But I'm not a great fan of M&M Finance. It's not been a great value creator. It has largely underperformed its peer group companies, especially stocks like Cholamandalam or even Shriram Transport. Whenever there's a down cycle in the NBFC space or vehicle lending, they're impacted the maximum when it comes to NPAs. And really, I think there's really nothing much to look forward when you buy into M&M Finance. There are so many better choices within the NBFC space. And I think the preference should be for those companies like say Cholamandalam or even Shriram Transport. And if you want to play extremely safe, then even a Bajaj Finance, I think. M&M Finance has been a very big underperformer. And nothing really has changed for us to change our view that it will start performing really well over medium to long term. But yes, there's a trading play. Once the news flow kind of dies down, and maybe a good quarterly number is around the corner.
Okay, yep. I mean, I don't want to be harsh, but it has been a series of accidents, right? I mean,
yeah.
At the same rate as we saw in 2016, around the 200 rupee mark. Up and down, of course, there was COVID in between, sank like everything else, and then came up. But generally, as Deepan also pointed out, it's not really done very much. Now, let's talk about the other big story of the day, which, of course, is the Tata Group sort of consolidation that we've seen in Tata Steel. And the board of Tata Steel has approved the merger of 7 Tata Group metal companies with Tata Steel. Listed entities include Tata Steel Long Products, Tin Plate, Tata Metallics, and TRF. Nigel has gone over to the big vault to tell us more about what difference this makes to the Tata Steel entity and to the other listed entities as well. Nigel, over to you.
Well, the long-awaited big consolidation drive at Tata Steel has finally been announced, with listed entities like Tata Steel Long Products, the tin plate, as well as Tata Metallics. All of them are going to be merged in its parent, that's Tata Steel. Keep in mind, Tata Steel has majority stakes in most of these companies, though in TRF, they have around 34% stake. Now, the merger ratios that were announced should come up for you on the screen, and they were more or less in line, barring TRF as well as Tata Steel Longs, where the merger ratio was unfavorable, which explains why both those two stocks were under pressure post the big run-up we have seen in the last 1 week, in fact, in the last couple of weeks. Additionally, Tata Metallics also got hit, as the street believed since bulk of its EBITDA is coming from the non-commodity DI pipes business, well, it could possibly warrant a higher valuation. But that's not the case going by the merger ratio, and that in fact disappointed the street. Now, benefits that will come out of this entire consolidation is simplification of the group structure as well as synergy benefits. But getting to the key benefit then, as of now, Tata Steel Longs as well as Tata Metallics, they procure their iron ore from Tata Steel. They have to pay 22. And additionally, Tata Steel Longs, well, the balance sheet had got stretched post the NINL acquisition. So the merger is a step in the right direction. We spoke to the management earlier today, and Mr. Kaushik Chatterjee said that the merger will be EPS accretive, and also said there will be more than 1,500 crores of cost saving due to this amalgamation, which bulk of it will come in from the royalty savings that I just explained.
Nigel, thank you very much for that. Actually, let's listen into some of the sound bites of Tata Steel's Executive Director and Chief Financial Officer, Kaushik Chatterjee, on what has happened. Listen.
After successfully merging and integrating Bhushan Steel, it was logical for us to look at the other subsidiaries which are of strategic relevance. And I think with these companies, all of these companies have, the businesses actually have a great future going forward. So first of all, it will be a simplification. And we have in the last 4-5 years taken out across Tata Steel Group about 120 companies. All of these are obviously EPS accretive for Tata Steel standalone. On the other hand, all of these were anyway consolidated because these were all subsidiaries. So after we the minority shareholders, the minority interest part gets absorbed. But otherwise, they were on its own already being part of the consolidated balance sheet of Tata Steel. So that's less of a point. The more important point is to drive the business in the future. And I think that is what will reflect very clearly on the Tata Steel balance sheet. And when I say Tata Steel, I'm always looking at consolidated balance sheet because that's the most relevant one. Annually, the annual number is close to 700-800 crores.
So I'm assuming that if this was a benefit of 700-800 crores, and if that's less than 50% of the benefit, then overall the synergy benefits will be in excess of around 1,500 crores.
On an NPV basis.
All right, that's the Tata Steel management, of course, the news flow there. Deepan, any thoughts here? Tata Steel, would you want to give it a look on the back of it? Or, I think the bigger overlay, of course, is the entire cycle itself. Your thoughts?
That's right. That's what the cycle is, what is really concerning in steel stocks, and Tata Steel included. I think with the way the global economy is shaping up at this point of time, you want to just avoid the commodity stocks and Tata Steel especially. And, while maybe medium-term prospects are good, and certainly there are some synergy benefits, but it's best to avoid Tata Steel and other steel companies. You're better off buying the steel consumers.
Okay, we need to take a break. The market just trying to sort of defend the 50-day exponential moving average. I think just to point that out, I mean, not that this market is about moving averages, but sometimes that's where, some support comes in. 17,350 is that level. So on a closing basis, let's see if we actually breach that or somehow manage to get above that. That's just something we'll keep an eye on. The bank Nifty, of course, is weak decisively, down almost 3%. We'll take a break. Up next, we'll revisit M&M Financial. Of course, there's been some very strict rule by RBI on that after that tragic incident in Hazaribagh. More on that after the break. And also our alpha manager for the day, Aman Chauhan of Abacus Asset Management, will be joining us.
Okay, welcome back. So 290 points lower, 17,336. So we're basically pat there, no real big change, and down about almost 300 points. Now, Mahindra and Mahindra Finance is slumping. We were just talking about that. RBI asked it to stop using outsourced recovery agents following the tragic Hazirabad incident. What are the financial implications of this, and what's the street making of it? Abhishek is here with the details. Abhishek.
RBI has directed M&M Finance to stop using, or outsourcing agents for recoveries and collections. So they can carry out recovery or repossession of vehicles via their own, set of employees. Total number of employees over there is around 19,750 odd. So M&M Finance has responded to that. They have said that they have stopped using third-party repossessions. They'll further examine whether and how third-party agents will be used in the future, and they gave a clarification with respect to number of vehicles, which is around 3,000 to 4,000 vehicles out of 4,000 to 5,000 vehicles will get impacted from this RBI rule. We have reached out to Shriram Transport as well. They responded saying that all their disbursals and recovery mechanism is via their own set of employees, and no vehicle repossessions are done via third party. We also reached out to Cholamandalam. They responded saying that they have a total of 13,000 in-house employees for collections and recovery, and they have agents as well, which is around 1,500. However, when the agents go out for recovery, they are accompanied by the employees of the company as well. Back to you.
All right, thanks a lot for that, Abhishek. Well, Deepan, the sector that came back strongly was cement. The new player coming in there, that's the Adani Group. There was a lot of excitement. It seems, though, some of the smaller players, the hope is that they'll get acquired. But how do you approach some of those stocks which have made big money for investors? Shree Cement, Ultratech Cement, they've been the relative outperformers, and they've been the go-to stocks in the cement space. They've been under some pressure. Do you think at some point of time these stocks become attractive, or would you go for now the ACC Ambujas of the world?
No, I want to avoid the entire cement pack, and even the ACCs, Ambujas, Ultratechs, as well as Shree Cement, they've been great wealth creators, but now it's time to lighten up over there. The way the industry is progressing, the kind of capacities which are coming up, and the overall dynamics of the industry are getting a bit, I would say, disrupted at this point of time. The beauty of the industry was price discipline. I don't know when such a huge transaction is taking place and a new player has come in with so much of aggression, whether the same kind of price discipline will be maintained by the industry. So I think it's best to avoid cement at this point of time. There are so many ideas in the market. You could look at cement consumers like real estate and engineering construction companies. I think they should do far better than cement over the next 2-3 years or so.
Deepan, thanks a lot for joining us, and have a good weekend. Well, that's Deepan Mehta. Let's now invite our next guest. The Nifty, by the way, is now on some decent recovery path. It's, sometimes we've seen this play out in the last hour when the market just miraculously recovers. Is this one of those sort of markets? Kotak Mahindra Bank, HDFC, ITC, these are few names which are sort of batting for the bulls. Not a lot, but just that from the lows, there's clearly some pullback which is visible. Aman Chauhan is joining us, fund manager at Abacus Asset Management. Aman, hi, good afternoon. Thanks for joining us. So, in some sense, perhaps this was coming, right? Our market just kept moving on, or kept moving higher while the global market was collapsing. But you tell us, how do you approach this phase of the market?
Frankly, the last few months have been challenging for an active money manager, because globally the markets were volatile and India had a relatively very strong performance. If you look at the last 6 months data, we would be the only one of the very few markets who are still in the green. It has been a difficult market. I feel the positives we all know as to why India outperformed. The local data points are positive. The interest rate is moving up, but it is still gradual. So we are nowhere near the crisis situation where interest rates can hit demand. So government is proactive. So all the positives we know, but at the same time, we also know the sentiment impact which market has. If the Dow Jones is down overnight, we open with a gap down. That connect didn't happen in the last month, and hence it has been a pretty challenging market, to say so. Going ahead in the near term, I feel now on we should be start tracking global markets. Maybe not in a one-to-one correlation, but if global markets continue to be volatile, I feel from these levels, Indian equities can also correct. At the same time, if markets they rally, then yeah, we'll also participate. So that's broadly what I feel. That the last 2 months disconnect should now come back, and we should start moving along with global equities.
Going along with global equities, which means catch a leg down then, Aman, right?
Yeah.
Yeah, I mean, so what does one, it's a real question for many who are completely fully invested. It's impossible to time these things, to get out at the right time and get in. I mean, all sounds nice in theory, but it's very, very almost impossible to do. Maybe few do it, very few. So what should one do? Should one do anything or just sit tight and ride this through? Are you making any changes to portfolio? What would you do?
So, as you rightly said, near-term moves nobody can predict. If anybody has a 6 months plus view, then I think we are headed towards positive times, because in the next few months, inflation numbers will start to cool off. One, because of base effect and because of the lower commodity prices. So that's going to be good. Demand environment should be strong. We're going to have a good festive season this time around post-COVID. So that's also something which is positive. In the overall, over the next 6 months, I see lots of announcements coming from the government before the upcoming elections comes in. So net, if anybody has a 6 month plus view, then this market, one has to benefit out of this volatility. Any corrections, anything, use the debts to buy and stay positive. In the near term, few months, I don't know, because the biggest worry today globally is not interest rate. It's basically what the demand destruction this interest rate is going to do. Whether you call it stagflation, depression, recession, whatever word you use, ultimately what you're trying to figure out is whether the US is going to have a hard landing or a soft landing. If it is hard landing, then near-term markets will be pretty volatile before Fed again steps in. And if it's soft landing, then I believe in the next 2 to 3 months, dust will settle. Post-Fed, we should start looking at equities again with a normal mid-teen to high-teens kind of return expectations.
All right. Hi, Aman. When markets have been volatile, you have been putting in money and you have been rewarded as well. Now it's getting a little tricky. And since you're saying the globe is going through a bit of a lull, there are two sectors. One is IT and the other one is metals. That's likely to be, see some turbulent times. I'm looking at top holdings. You have HCL Tech, you have Jindal Stainless as well. Both promising stocks on the valuation front, but now they're getting knocked back. Will you look to add on to those positions right now? Or do you think the time has come to sit by, wait, let things settle down, and then allocate? Go ahead.
For the last 2 months, we are not allocated fresh money to both metals as well as IT. We are just holding on to it. We would have trimmed some IT exposure in the month or so. I think we'll wait for a month or 1 or 2 months before we start looking at IT and metals again. For IT, I believe for the large cap, the valuations are now reasonable. One can definitely start looking at mid caps is something which is tricky. The stocks got re-rated all the way to 40, 50 P, which is after correction of the 30, which is still a premium to what Infy and TCS trade. So if they come near parity or closer to what the large caps are, at that level, I think we'll start looking at mid caps again. For metals, it's basically news flow driven. Every week there is some event, every week there is some news flow. I feel the trigger for metals will come once the Indian government reverses the export decisions that it has taken. And that will happen once inflation starts to cool off. So in the next 2-3 months, once we have a better inflation print and the government reverses its decision, then I feel the investor interest should be back into commodities and metals. And that is the time when this sector will start to look up.
Yeah, the only problem is by then you don't know if the metal cycle will be in a big down cycle or up cycle will be over, but of course we'll find out in future. But Aman, the other stock that stands out, of course, in your portfolio is SBI, and that's really been the most remarkable stock. Do you think that will remain the leader now for this market in the foreseeable future?
Yeah, we are holding on to it. We are not a big PSU fans. Besides SBI, maybe we have one more stock. Otherwise, we are not even present in the defense space because most of the companies are PSU companies there. So SBI is a standout purely because of valuation reason and the size and the scale the bank has. So Indian economy cannot grow without SBI participating. Taking the valuation of the subsidiaries and stripping that off from the current market cap, then it's still below book bank for size and scale that it has. So it's been a pure value. along with a good management at place. So SBI has been one of the best managed banks. So normally we see only value in PSU. SBI is one where we get a combination of both value as well as a good management team in place, and that's the reason it features in our portfolio. And we are pretty positive on the space. We continue to own it, and we'll be holding it for at least coming few quarters at least.
Aman, just to go back to that point, right? You said if someone has a 6-month plus kind of view, then you can look to use the dips to buy. But if you we are sitting on a huge 17-20% outperformance on top of Western markets like the US, which you referred to earlier. So if we are sitting at such a stage, and generally one can kind of get a sense that financial conditions will continue to tighten. There is no sign that things will suddenly pivot, become much easier, etc. Right? So there is downside that's unknowable. How much should one create some cash to be able to buy that dip whenever that happens, or you think that would be unwise? What's your sense?
So it's an individual call as to how much cash you want in the portfolio. In our portfolios, we have cash anywhere between 10 to 15%, and which we intend to deploy in the next 3 months.
All right. What about the domestic-facing themes, Aman? You liked auto ancillaries. There were building products as well. That's something that you have got right in the past. Whether it was something like an Acrisil, HIL, they have done pretty well. Do you continue to remain your positive stance out here? They are the sectors worth betting on from here on as well?
Yeah, we continue to be positive because we are positive on real estate and we don't have a direct real estate exposure, which we indirectly get through by these companies. Then near term, some of these companies for the next 1 or 2 quarters might have a headwind. Somebody is exporting to Europe, somebody is importing some raw material chemicals from China where prices would have gone up. But there is some margin pressure in some of these companies. But if I have to normalize that and look beyond 6 months, once things should stabilize by that time, I think this company still offer decent value. And that's the reason we continue to remain positive and continue to own them.
Aman, the stock that was the real money spinner for you post-COVID was Route Mobile, right? I think you were pre-IPO investor, and you can correct me if I'm wrong, but you made multiple times returns on your investment. But from its highs, the stock has fallen about 40% or so. Are you still keeping the faith here?
Yeah, we don't comment individually on stocks, but yeah, broadly, we continue to hold on to what we have. If you look at the numbers, first quarter numbers were great. This year, the company will be growing in excess of 50% top line and more than that on the bottom line front. And I expect this momentum to continue. So even 24, it should grow in excess of 20-25%. So for that kind of a growth CAGR and a very clear beneficiary of the global digital trends that's going on, it still makes good sense to have this in the portfolio.
What about sugar? Is it as sweet? I think, a few months ago, not, in the last couple of months, but I think maybe the month of April, maybe had a chat out there, and sugar is looking quite sweet. Is it as sweet right now, or do you think, you'll hold back for the time being?
Sugar is as sweet as far as the sector is concerned. Last few months, stocks have not performed. Main reason one was that the government had that export quota come in. Industry is expecting some relaxation and a new number for the export quota for the next season. Once that comes in, I feel demand should be back into sugar lane. So globally also, sugar seems to be holding on around 18.5 cents. And if that's the scenario, and with talks of further drought in Brazil as well as lower output in Thailand, then I believe internationally sugar prices should do well, and then domestically also all these companies, because of the ethanol profits coming in, will do well. And there is no reason then why the sector shouldn't get re-rated. So that's broadly what our thesis is. Thesis is holding on for now. Last 6 months, stocks have not performed, mainly due to the government issue. Once that is resolved, I think sector should be back.
Okay, all right, Aman, always good hearing your thoughts. Thanks so much for joining in and giving us your views on a whole host of sectors. As you said, sitting on around 10 to around 15% of cash at these levels, and you'll gradually be looking to deploy. Wishing you a good evening and a good weekend ahead as well. By the way, that bit of a bounce that we were seeing on the Nifty, that's got sold into, and we're drifting back towards that 17,300 odd. Remember, we pulled back to around 17,360, and from there, we've again seen some bit of selling. Difficult trading session for the bulls. Well, slip into a short break. You come back. We'll be joined by Nimesh. He'll tell us what's going on in dealing rooms. And our technical experts will be back with us to tell us what to buy or sell for a reverse trade in the coming days.
Welcome back. It's looking really ugly now on the screen. The Nifty is approaching a 2% fall. That bounce back that Nigel was pointing out has been sold into. 17,321 is what we have on the index. Larsen and Toubro has led the last round of decline. And there are others like Bharti Airtel as well, which are giving it company. So the screens not look good today. The advanced decline line is now 1:5, and it's widening even further. Since morning, of course, it's been quite weak. But as we move closer towards the closing, it's actually the gap is widening, which is never a good sign. But let's go across to Nimesh then for D Street chatter. Nimesh, tell us, has there been some heavy-duty FI selling today?
Well, and that doesn't look to be, that's not the feedback that there is massive FI selling. But yes, there is a bit of withdrawal of ETF capital for the last few days, and that's been the trend today as well. So that's the overall feedback from a flow point of view. Having said that, it looks like India is finally now catching up to the global underperformance and reacting to the worst macro data as well. Remember, for a very long time, India has been actually ignoring the global data and outperforming. So that's finally now catching up. In terms of, again, the fall today is essentially led by financials, and that's where there was a bit of, overposition as well in the last few weeks, and that's reversing a bit. So the Nifty Bank is down almost 3% in today's trade. From the highs, the Bank Nifty is down more than 5%. So that's a bit of reversal as well, which is happening in the financial names. In terms of sectors, having said that, there is still a bit of buying interest. The two sectors which stands out today, one is of course autos, where there is a bit of buying interest from the large institutions, and selectively after a sharp knock in many of the individual names, some bit of financial stocks are bought into by the larger funds. That's the overall feedback from a flow point of view. In a couple of macro data which will be important to watch out for. One, of course, the credit data, the fortnightly data which will come today evening, and the RBI policy next week. Both will be very, very crucial for the bank's performance, at least in the near term. But technically, it looks like some of the crucial levels are broken. So the level now which a lot of investors are talking about is maybe around 17,200 on the downside, or maybe 16,800 on the downside. So that's the level to watch from a technical point of view. Net, a bit of reversal on India's outperformance of late, but there is no panic selling, is what I understand, as far as flows are concerned.
Okay, all right, Nimesh, that'll be good news actually if there's no panic selling. But individual stocks, what are you picking up?
Hi, Nigel. So in terms of individual names, the first stock is Anupam Rasayam. That stock was up 6% yesterday, flat in trade today. But I understand, the company is likely to raise funds via QIP very soon, maybe early next week, is the indication that they will raise money. So that's the first one. The second stock is PI Industries. There was a block of almost 10 lakh shares in the pre-open today. In terms of details, I understand that the promoter entity was a seller, and clutch of domestic mutual funds were buyer in today's block of that 10 lakh shares. So PI is under pressure today on the back of promoter selling some small stake. The third stock is Deepak Fertilizer. If you look at that stock in the mid-cap space, that's been a big outperformer in the last 1 quarter or so. And now at these levels, I believe there's going to be a large block deal very soon in Deepak Fertilizer. So that's the third one. And the last stock is NHPC. We heard the management as well, today on the channel. A couple of days back, CLSA put out a big note initiating coverage. And since then, there has been consistent buying in NHPC. And even in today's trade, the delivery volumes are going to be quite high, because I believe some large long-only funds seems to be quite active buying into NHPC today.
All right, Nimesh, thank you very much for that. So that's basically the list of stocks which Nimesh is telling us we need to keep an eye out on. We will. 300 lower. It's almost as if that rate is stuck on the tape. No real big movement at all, one way or the other. Mitesh is with us to tell us what to buy or sell today, or sell today to buy tomorrow when we come back. That is on Monday. Mitesh, hi. What do you have?
So, Prashant, two sell calls. In fact, given the fact that the weekly closing is very low, I think there's a chance of this kind of action spilling over on Monday. So I have a sell on Bharti or STBT on Bharti Airtel. Here I would recommend stop at about levels of 774 for targets around 760. And the other one is a metal name, that's the Steel Authority of India Limited. STBT here with the stop just about 79 for targets around 76 half.
Okay. All right. Thanks for that, Mitesh. By the way, from the broader markets as well, a few of these stocks, they're taking a bit of a knock. I think PI Industries has pulled a little bit lower in the last few minutes. Even Firstsource, that's another stock that's getting a bit of a clonk, as is the case with Laurus Labs. Niraj Diwana, Director of Quantum Securities, joins us. Hi, Niraj. Good afternoon. Well, not such a great afternoon, actually, for the bulls. But everyone's been waiting for that dip. Well, the wish has been granted. Hopefully, it's not going to be a very deep one. Your view on the financial space, which are the stocks you look to buy? Because financials have got a hardest hit after being big outperformers.
Yeah, good afternoon. Yeah, definitely everyone has been talking about this correction. You know, it got a little late in coming and it's come today. And you don't know whether it's going to take some base around these levels or some more downside. So it's very difficult to take a call on that. But definitely financials have done very well lately. And, you know, when you meet most of these banks, the credit growth has been very strong. And, you know, as far as the asset quality is concerned, everyone provided enough. And, you know, if the growth is coming and they're able to, you know, keep the asset quality under check, at least for some time, I think financials is one space where I will use this opportunity in the correction to accumulate. So there, you know, though the stocks like ICICI Bank and State Bank are everyone's favorite. They've given excellent returns, done very well. But I think even the second-run banks, you know, if you speak to some of these banks like Canara Bank, Bank of Baroda, I think there also you see a lot of improvement happening, credit growth also happening. And even in the private sector banks, banks like IndusInd Bank, you know, there also asset quality pressures have reduced. They have excess liquidity now, and they saw good credit growth of 18% in the first quarter also. And, you know, with credit costs coming down gradually, I think margins and the profitability will improve for these banks. I think I would have a look at these second rung of banks like Bank of Baroda, Canara Bank and IndusInd Bank in this fall.
Okay, Canara Bank is also down 6%. I mean, most of the market is. Niraj, hi, good afternoon. Would you buy Power Grid at current price?
Yeah, good afternoon. Yeah, definitely. I think, though I will like to see for a couple of days more, but today may be the first day. You know, there's no need to react immediately and buy today. Maybe you let the market take a base. But as a stock, Power Grid, definitely I'll be looking at adding on dips.
No, the reason we ask you, Niraj, is because, you know, suddenly there's that talk that it'll be forced to go ahead and pick up that stake in REC, because and that money that PFC will get will be used to finance all these projects. Don't you think that's an overhang? Otherwise, it's such a well-run company, sitting on cash, good dividend yield as well. You know, a couple of brokerages are talking about close to 20 rupees hit if this happens. You know, would you want to wait buy or maybe 10% lower from here after the 10% correction that we've seen? Then you like to get in.
Yeah, that's what I said. You know, I would like to wait for a couple of days more and see whether there's any real substance to that news that is happening or not. You know, at a little lower than this, another couple of days, I think value-wise it will definitely become a buy, because it's like a annuity at a higher return than when you buy Power Grid. Of course, that overhang will stay with the company. If that actually happens, you know, there will be some hit. But I think a little lower than these levels, I'll definitely have a look at this and buy at a lower level.
Okay, at low. What else will you buy at lower levels, Niraj? I mean, assuming we are starting to catch up a little lower, it's just a one-day fall so far. It might be large, but you know, typically it's come back quickly, so one doesn't know how low is going to be the low this time. But what would you want to buy? What else?
Yeah, definitely, you're very correct. You know, the first day, it may extend to another couple of days or a couple of weeks. So no one can really take a guess on that. So global environment stays like this. There's also a possibility that, you know, we've already had the Fed decision. We may have the RBI decision next week. We'll also have. So, you know, once then, you know, you may just carry on and carry on investing and, you know, looking at the markets. So, but there, I think there are sectors which have done well, you know, like we discussed banks. I think automobile also is one space where there's definitely improvement is happening. You know, something like Tata Motors correcting with, you know, they're going to launch their EV also, which is a low price EV. You know, Navratri is also coming. So, you know, festival season is coming. So autos can again, you know, show good numbers. So autos will be another sector I'll be looking at. And then, you know, specific infrastructure, order book driven companies which have strong order books, and they were earlier hit because of the high commodity prices correcting will help the margins. So these are the kind of sectors I'd be looking at adding, and depending on, see couple of days whether the market is taking a base here or not.
Okay, well, let's stay on. We have more questions. For now, let's just get you some more market opinion. Earlier today, we caught up with Suresh Tanti, a senior investment strategist at Credit Suisse. Let's hear out his views on the rupee and the overall market.
I think you would see some outflows from India, especially as investors are now getting worried about INR depreciation. The interest rate, the differential between India and US are widening, and that could put further pressure on INR. And RBI is very hesitant to hike rate more aggressively compared to what other central banks are doing. So that might lead to some outflows from Indian equity market, especially as the market has done well and valuations are not cheap. Certainly, I think one should move away from equities to bonds because now bonds are looking much more attractive. Even within the Indian equity market, I think bonds are yielding better compared to the equity valuation. Nevertheless, I think you can't completely get out of the market, especially given the strong economic growth outlook that we have in India. But I think within the equity portfolio, one can readjust from companies which are exposed to global slowdown to a domestic place. Those would be sectors like FMCG or the banking names, which could continue to do well given the strong economic recovery. On the other hand, sectors like technology or commodity names, they could come under pressure as the global slowdown continue.
Okay, all right. It appears, at least for the time being, we're likely to defend that 17,300 mark on a closing basis. Slip into a short break. Come back. Final 9 minutes till the time we wind down the markets. Well, let's get you some market opinion then. Ambit Capital's Niraj Agarwal believes that the worst of the FI outflows is over. Let's hear him out.
IT is exposed to global markets, particularly the US, and despite the fact that IT stocks are down between 30-35% in the last 6 or 8 months, if one looks at valuations, they are still about 20% premium to the average valuations pre-COVID levels, whereas the growth is actually trending back to its normal pre-COVID levels. The bump that we saw during 21-22 is actually normalizing very, very fast, both on growth and margins. There is a weaker global demand, there is slide in metal prices, but this is very, very different from other metal recessionary trends that we have seen in the last 25 years. In every other previous weakness cycle for metals, the metal companies typically tend to drop into losses because of high amount of leverage on the balance sheet and very poor cost management. As compared to that, let's say Tata Steel, the name that you quoted, Tata Steel in this down cycle will still make more than 10% ROE. So typically metal stocks, if you buy in a down cycle and just hold it for some time with patience, you make a lot of money. We think that the worst of the outflows is behind. So if you see cumulative outflows between October and till June or July of this year, FI sold roughly 230, 240 basis points of India's market cap, which is actually slightly higher than the net selling that we saw during the GFC months, which was also around about 200 basis points of India's market cap. So, I mean, 2 data points doesn't make it a trend, but I think it's fair to say that bulk of the froth, hot money, profit booking, leverage money, whatever you call it, is probably taken out. But at the same time, I would like to caution that the strong inflows of $8-9 billion that we saw between August and first half September, that pace also may not continue.
Okay, all right. Mitesh, let's get you in for a final comment then. It's not been a great session at all. And if you were hoping for a pullback in the last hour, after a while, actually, that's not happened. Otherwise, you bought the dip. It became so simple. Turn up and make money if you're a bull. Your view now, we close at around 17,300 or thereabouts.
My understanding is that I think 17,150 could be tested on the downside, which is where the weekly averages are placed. So I think 17,150, and then there's a good gap which we had created once the Nifty was going up around the 16,950, 17,000 mark. So broadly give and take, that level should come into play very strongly. And that will also mark a significant correction. You have gone up from levels of 15,200 to about 18,100, and you would have come back, given back nearly about 35-38% of retracement on that. So I think around these levels, you will see good supply coming. Not to forget that the 200 average area is at 16,975, 17,000. So broadly 17,150. In the worst case scenario, I'm penciling in about 17,000 levels.
Okay, Mitesh, thanks a lot. Have a good weekend. We'll talk to you next week, of course. Just looking at some more names before we start start wrapping up things. Dish TV is down 7%. Niraj, any thoughts on Dish TV? Worth a punt, or do you think just avoid it?
No, I think just avoid it. It's not given any return. It's been just languishing and going down only. So I really don't think, and there's so much competition coming there also, coming the way from Jio. So I really will avoid it.
Thanks a lot for joining us, and have a good weekend. Let's start wrapping up the market action then for the day. And well, it was a brutal day, though there's no other way to describe it. The market, not just the way the Nifty was down 1.7%, but the trending downward market, not at any point did the market even attempt a recovery. At best 30-40 points, and they were all sold into. And more importantly, for the bank Nifty, right from the word go, it just kept trending lower and ended almost 3% down. And remember, this is on top of the decline that we saw yesterday as well. It's a start of the full expiry or the monthly expiry, so and things could get really interesting from here. The top loser was Power Grid, but the top contributors on the way down were your HDFC twins, both HDFC Bank and HDFC, ICICI and Reliance. Along with that, you had names like Axis, State Bank of India, UPL, NTPC. Then, of course, a lot of profit-booking candidates like Mahindra and Mahindra, which was down quite a bit. Titan, Tata Motors. So all these consumption names were correcting. Steel stocks, JSW Steel was down quite a bit. Larsen & Toubro was lower as well. On the way up, just Pharma. Divi's Labs, Sun Pharma and Cipla were higher. And ITC also, by the way, fresh 52-week high on ITC. Prashant, broader market also collapsed quite a bit.
It did. 4:1 in terms of declines to advances today, and things look tough. Power Grid was down 8. Mahindra and Mahindra Finance was down 13.5. Z lost 5% today. Canara Bank was down 6. Well, actually, a lot of the stronger parts of the market came under pressure. Chola Finance was down 6. Federal Bank was down 5. Ease My Trip was down 6. Dish TV was down 7%. The Tata Long Products, Tin Plate, all these were down about 5-6% as well. And actually, Long Products was down about 12-13%. Chambal Fertilizer down about 5. Thermax down 8. So that's a big cut. You had JK Lakshmi down 5.5. Raymond was down 5. And many other names in that 4-5% with volumes today. Nigel.
Well, let's bring you some gainers then, because there were a few from the broader market. Sundaram Finance Holdings stock up 8.5%. Volumes massive out there. Let's see whether or not there is a disclosure that comes out. TNPL, remember the street is betting on costs coming down out there, and the debt as well coming down. So that stock was up close to 7% in a very, very wobbly market. Federal Mogul Gods, remember the stock has got clobbered from the top. Well, that stock as well, did end high with a gain of around 5%. A couple of diagnostic stocks did well. Kim's, that's Krishna Institute, well, that one was up. Federal Mogul Goats, as I already mentioned, and Vijaya Diagnostic as well did end higher in today's trade. But that doesn't take away from the fact that it was a weak trading session. The breadth of the market firmly in favor of declines. You had 5 stocks that were declining, but just 1 stock that was advancing. The Nifty goes home with a cut of more than 300 points. The Nifty Bank, big pullback after a long while. Remember, that's been the big outperformer. Today, that index as well did come in for some selling. Well, on that note, though, we'll have to wrap up on this edition of Closing Bell. Wishing you a good evening and a good weekend ahead as well. But before we do that, on the other side, a very interesting chat on how to achieve financial independence coming up on our Friday special, Smart Money. Sonia's waiting for all of you.